I believe in 2024, more money will be converted from fiat to Bitcoin than the previous 15 years. That's a big ass statement, but I believe it. And it's because most of the increase in the market cap of Bitcoin is not new money, right? There's been a lot of money that got converted over time, but there are people who mined, 10 years ago, they never added any more fiat. It's just that value went up because people are buying and selling, on the margin, plug for on the margin.
Morgan Creek Capital founder Mark Yusko asserts that a substantial $300 billion capital influx could enter the Bitcoin market through a spot-based ETF. However, the recent week witnessed significant negative net flows in the spot Bitcoin ETF sector, primarily driven by substantial outflows from the Grayscale Bitcoin Trust. Investors exited the project due to high fees, resulting in significant negative net flows. Amid these outflows, a report confirmed that Grayscale had sold 52,227 Bitcoin tokens, equivalent to $2.14 billion, following the ETF approval. The data indicated that Grayscale held 566,973 Bitcoin, valued at $23.21 billion. Yusko emphasized the setback in anticipated outcomes linked to ETFs attracting $300 billion. Bitcoin experienced an impressive surge of almost 160% last year, surpassing traditional assets like stocks. This surge was fueled by expectations that the approval of U.S. spot ETFs would stimulate broader cryptocurrency adoption among institutional and individual investors. Yusko further delved into the dynamics of price movements, underlining the influence of supply and demand curves. With the next halving event expected in April 2024, just a few months away, there is anticipation regarding the future trajectory of Bitcoin. Historical patterns suggest that previous halving events have been associated with a bull market, characterized by a decrease in new Bitcoin supply as it nears the 21 million maximum limit, coupled with an increase in demand. Let's delve into the few clips from the interview. But before we begin, consider subscribing to the channel and hitting the bell icon to stay updated with the latest content.
GBTC had just kind of become de rigueur and people were talking about it, and a bunch of money went in. And a bunch of money went into a small asset, and demand went up, and we went from 10 to 60 in a heartbeat, because by my estimates, about 10-ish billion in an asset that was trading about 2 billion a day went in. And we went up. And then Elon famously tweeted, well, we don't like it anymore, so you can't buy your Tesla with it. And I might sell some of it out of Tesla, and because he had to pay some bills. And it crashed. And then liquidity went the other way, right? Because people were like, oh, I'm out. And so, but then by summertime, people are like, well, it didn't go away. And I kind of like this asset, and the halving had occurred. And remember what the halving does is it reduces supply. So there are two types of things that will drive price, right? You got your supply and demand curve. You can increase demand. Right? So if you increase demand, if you shift the aggregate demand curve, the price goes up. P1 is higher than P0. Second thing you can do is you can shift supply. You can restrict supply. So if you have a demand surge, GBTC, and a supply cut, what happens? Price goes up. So, but then what happens, and we've talked about this, is when the price is below fair value, investors buy. That's what investors do. They buy things below fair value. Then what happens is, as the price starts to move, the traders come in. And the traders don't really care about value. They just want movement. So they start. And, as the price keeps moving up, more traders come in, more buyers come in, great. And that actually attracts some new capital into the asset, whatever shiny asset that is. Well, then the speculators and the gamblers come in. Well, who are they? Well, they're the people that come in, they don't give a crap about anything. And just a number go up, I'm in. And I'm doing it with leverage. And back then, you could still get 100 times leverage. The halving is 3 months away. That supply shock is real. And we had a little hiccup in the last couple weeks because everybody thought, well, as soon as the ETFs, $300 billion is coming in. Nope. We got 5. 5 is a lot. But we didn't really get 5 because GBTC made a decision to keep fees high. So they lost roughly an equivalent amount. And so we haven't had the net inflow yet. And those overlords,
almost $1 billion.
Which is great. But that $1 billion is going to turn into 10, is going to turn into 30.
According to the firm's executives, Vanguard decided not to offer clients access to Bitcoin ETFs because the flagship cryptocurrency is an immature asset class that does not align with its company philosophy. Vanguard Global Head of ETF Capital Markets and Broker and Index Relations, Janelle Jackson, made the statement that, while crypto has been classified as a commodity, it's an immature asset class that has little history, no inherent economic value, no cash flow, and can create havoc within a portfolio. Mark Yusko challenges the idea prevalent in the crypto community that people willingly choose to stay poor. During the discussion, he labels Stephanie Kelton, connected with modern monetary theory, playfully labeling it the cult of Kelton and likening it to modern monetary theft. Now let's redirect our attention to a video.
And populism rises.
That's the
populism rises when people are disenfranchised and unhappy and getting poor. And, the have fun staying poor thing that all the crypto people thought, that ain't it. It's literally the government saying, we're in the castle, you're not. And you have fun being serfs and peasants and working for us. Ms. Kelton, right? Stephanie Kelton, the cult of Kelton, the MMTers, the modern monetary theories, which is basically just modern monetary theft. It's just more inflation to steal your wealth. In 2013, tweeted that Bitcoin was worthless. Literally, it was going to zero. I think the price was $650. And proving once again that she can't do math, which is kind of ironic, given that people think she's some guru, but economics is a voodoo science. It isn't about math most of the time. I mean, supply and demand are, but that's not what she's talking about. She came up with this crazy theory that as long as you are the world reserve currency, you can issue as much debt as you want, and it does not matter. Well, no, hun. What is Bitcoin today? 41,000 instead of 650. Well, did Bitcoin grow? Like, did a single Bitcoin get bigger? No. Did it get more efficient? No. One Bitcoin is always been one Bitcoin. But what happened? The money that you told everyone to print got worse. That's it. And I was talking about this the other day with somebody. It's not just here, to your point. It's Argentina. They just elected. I mean, I love him. Maybe. He might be so crazy that I like him. I got great joy yesterday in that a bunch of people were tweeting around this thing saying that, today, it's deemed risky to have Bitcoin. Tomorrow, all these advisors, it's going to be risky to not have Bitcoin. And so I pulled up a video I did in 2018 saying those exact words that, look, over the next decade, it was going to become fiduciarily, you would be derelict in duty as a fiduciary if you didn't own Bitcoin. And we're halfway there. And 5 years from now, if you don't own Bitcoin, if you work at Vanguard, if you work at Fidelity, if you're a financial advisor and you don't own it, you will be derelict of duty. Full stop.
Bitcoin might not have met the market's expectations in January, but market experts are convinced that February will be much more promising for the apex cryptocurrency. Today, more than $25 billion of Bitcoin is held in exchange-traded funds, with about $1 billion coming in the 2 weeks since the SEC greenlighted the new funds. That's real money, even for financial giants like BlackRock. Given the market experts' positive outlook, are you optimistic about Bitcoin's performance in February? Share your thoughts in the comments. If you found this content helpful, give it a thumbs up and remember to subscribe to stay updated. Thank you for being a part of this journey with us.